yesterday. So far, the monthly is still in a developing +4 pattern, right? Previous month still a +4. We're still monitoring that 48.20 as the previous month's close. Will become important should we continue this downward trajectory. I can see we have excess on the high, excess on the low on the monthly, and we kind of just, trading 48.70 on the close yesterday, trading up a little bit higher now, 48.91 quarter. But so far, really, the one thing that we are drawing from the monthly is that we're still one time framing higher. Remember, this is how the month ended, so today is the first of the month, right? Anyone remember that song? So we'll get a new monthly bar forming here where it opens, and then we'll be monitoring now, since we closed with a +4, yesterday's close, which was 48.70 half. Below 48.70 half, we probably get some more liquidation, and that causes the market to trade a little bit lower, and we'll just kind of pay attention from that. But that'll be a level that we'll mark up today. Switching over here to the weekly, we can see we so far have got that cessation of one time framing on the weekly chart, right? So this is the previous week. We got a cessation of one time framing. We actually traded back to that previous week's close, which was also +4 here. And so one thing that I always like to say, or one thing that I always look for, is typically we get our first real look of change on a weekly chart. And so right here we get that cessation of one time framing, and so it'll be very key as we kind of have a balance here. We move above that balance, and now we're kind of trading back to the top of it. So if we get continuation and acceptance in this lower balance, or will we get that rejection and trade back up into this 2-week balance, will have to be the key and kind of pay attention to today. So far this week, though, is an outside week. So yesterday or last week was really just consolidation. We get this balance, we get the breakout, get a consolidation week, test above, we set an all-time high, and then now we've broken the previous week's low. So we have an outside week, so a little bit of volatility picking up in the market here. Switching over to the daily, you can see yesterday was a -4 day, and that will be key. We'll have to watch that close from yesterday. That's that 48.70.50, right? Same as the monthly close. We'll be marking that monthly close, and monitoring from there. We get the cessation of one time framing, right? We had just been one time framing up for 9 days, I think we said. We get that break down below. We still have a gap above that's unfilled, and we still don't really have great excess on the high. And I think the high is still set. The all-time high was actually still set in Globex hours, so definitely gonna be something that we want to be paying attention to. Yeah, I will, Dope. No problem. So now we switch over here to the profiles. We'll do a little bit of review from yesterday. And if you weren't with us in the live room yesterday, you can check the Discord. Luckily for us, Zoe recorded it, and there were some good lessons in there, and kind of how we were on the right side, really, to take that downside. It did trade down a little bit farther than I expected it. About 5 points slower than we kind of expected it. It really traded to the low of this previous balance, and like we said, back to that weekly +4 down here. As far as the settle goes from yesterday, we're going to have to move this up here, and so this is going to be on our settle as well, and we'll kind of see how this goes on. So we have a little bit of push-pull here, right, as we got a -4 day yesterday, but our monthly finish above this 48.70 is still kind of positive. So that's kind of a double positive in this situation. As long as we remain above this 48.70, the market still has decent opportunity to get more upside. And so that's one thing that we want to be aware of coming into today, because it's going to kind of play against our plays, right? And so typically we look for two plays, and they pretty much have the same outcome. Play number one is an inside value. So here, I'll just type them, it'll just be easier. So play number one is typically inside value, where we monitor for a break of value area high or value area low. And so what that looks like, right, is if we were to open up inside the market, and we'll just use this day as an example up here. So if we were to open here, we would be looking to get long. If we break this value area high, we'd be looking to get long on the pullback. If we were to break value area low, we'd be looking to get short on the pullback. And so play number two is very similar, and it's open outside of value, and we want to trade in the direction of developing value. Okay, and so what that's going to look like, if we just use this other day as an example as well, is if we open outside, so let's say the open was here, we move higher, we break this value area low, well, we're going to be looking to get short somewhere inside value to trade back towards that low. So in today's case, we have play number two setting up, right? Because we're opening outside of value. And so we're really going to be looking for it to trade back inside of value and looking to fade somewhere in here. And this is one of those days where you have to exercise a little bit of caution, because on a -4 day, we know that we really don't want to be short, or we have to be very cautious with shorts above the settle. And the settle was 48.70 And so above that 48.70 we have to be cautious with short. So our plays kind of tell us, okay, well, we're most likely going to get value developing lower, but also we want to exercise some caution because of how the market traded yesterday, right? And then a couple other things that we incorporate spike rules here. And so the spike rules are kind of telling us we're trading, we're kind of within the spike here. So it's kind of showing lower prices are accepted. And this may be indicating that we might not come up and test this value area from yesterday. And if that's the case, it makes our job a little bit easier to just get short against it, but it's not really within the plays. So in that case, kind of what we're looking for here is either a fail of these single prints, right? So you can see Globex traded right up to the single prints. That's a liquidity zone. So on the open, especially with overnight inventory 100% net long, one thing we'll be looking for is a correction of that overnight inventory. If we start to get a correction and tempo starts to pick up to the downside because we're opening up within the spike, that's more of a go with situation, and you probably want to try to get on board with that as soon as possible, right? That's going to be a lot more aggressive trade, and you're going to want to be in that trade, and you're going to want it to be working fast. You're not going to be wanting getting in that trade and have it bouncing around. It's either you're going to get in and it's going to work right away, or you're going to get in and it's not going to work right away and you're going to be out. The second opportunity, if there's no correction to the overnight inventory and it comes up into these single prints, which are about from 96 to 88, and starts to trade sideways, there's some opportunity there to try to take a peek at it against the top of these single prints, and that's really that 4,900, and look to take it back down to, this distribution here. So that 84, so let's say you get 92 to 84, that's not too bad of a trade there. But that's really kind of all you're working with. If we get an open that just gets a bid right away, right? So if we open and we trade back into yesterday's value and you just kind of see it start to hold this 4,900, I really think you just want to, kind of let the market settle out, because it's going to be it's going to be a real high risk that the market trades back to this 49.16 if it gets accepted in yesterday's value. Right? Remember, we do have a gap above, so the market looks to trade to and through liquidity. Well, we know that there's going to be some liquidity up there for sure. And if the market can catch a bid, or if these shorts that jumped on board yesterday causing that downward spike were most likely weak-handed traders or short money, then they can cover very quickly, and that can cause that draw back to that upper distribution. And so when we're looking at this, you can see these distributions here, larger volume distributions on the side. Those are going to be kind of your playing points today, I think. So if we trade into this weak zone here, that would be the area we'd look to fade back below. If it gets acceptance above this ledge, and that's kind of like that 49.05, then the odds are that we trade back to the point of control, which is that 49.16. And yesterday we had a stuck long at that 49.25 when we got the pop. Momentum traders tried to pile in. We left a poor high behind, and momentum buyers got stuck up here. So the market may rally, try to let them get out, and I could see a fade from that area, or a short from that area, to try to fade back below the weekly low. So a real kind of complicated day setting up here. I hope that explains, doped, kind of how I'm setting up these plays. And they're really the same play if you think about it. It just matter if we open inside of value or outside of value. I'm really just looking for the market to trade one side of value, whichever side it trades first. Typically, about 85% of the time, we get developing value in that direction. And for the most part, if you're trading in the direction of developing value, you're pretty much going to be on the right side of the market. And if you're kind of unsure of what I mean by developing value, what I mean is, if we look at these charts here, and so you can see value is here, is overlapping to lower, and then the next day is overlapping to higher, and then the next day overlapping to higher, then the next day is just higher, right? And so this is really what, and of course it's easy to look back on that and say, oh well, of course when the day's over it's easy, and that's true. When the day is going on, it's not as easy, it's not as clear, but that's gonna come with time on the market. Something like Jim Dalton says, so like there's certain things you can't teach, like tempo. You can't really teach tempo. You have to watch the market and get the experience to really understand tempo. And value is something that you can definitely see and you can teach, but like anything else, when an example I like to use is every human body is different, and so you can study the book of the human body and you can know where all the organs are at, and you can know where all the arteries and the veins are at, and you can know what to expect when you slice open a human to perform surgery. But every human is different, and so sometimes when you slice them open, yes, they're going to have all the same organs and the same arteries, but they might be in a little bit different places. They might be a little bit different shaped. Some might be larger, some might be smaller, and so that's going to be kind of your same thing when you go to developing value. So as the market opens, that's one thing that you always want to be aware of or trying to foresee is when the market opens today, right? We're going to be opening if value's up here. What's going to have to happen? Ask yourself these questions. What's going to have to happen for the market to have value lower, right? Well, if the market's going to have value lower, it's not going to trade the 48.95. Okay, so it's going to trade all below that. That's going to give us value lower. Well, what's going to have to happen if it's overlapping to lower? Well, if it's going to have overlapping to lower, we probably don't want to see it trade. We'll definitely don't want to see it trade above this 49.16, but we'd like to see it, if it does trade up and we're expecting overlapping to lower, we're looking most likely for it to have slow tempo, right? Trades up, starts to trade sideways a little bit, trades down, trades up, and then that can give us that opportunity to start taking stabs at those rallies and selling those rallies. Now, what's going to have to happen for it to have overlapping value completely? It would just have to trade inside. That doesn't happen very often, which today we might have an inside day, so it is possible. What's going to have to happen for us to have overlapping value to higher? Well, if we're going to have overlapping value to higher, we're going to have to trade above this 49.20. And most likely what we would be expecting is not only for us to trade up here, but to stay up here. And that would bring value higher, right? It would bring value in and volume would follow for confirmation, right? And that would be overlapping to higher situation. Now, if we're going to have value completely higher, we'd really just have to get a trend day and just keep continuing off of that, which isn't impossible, right? If we get a nice bid off of the open, pull back to that weekly +4 that sticks and keeps going above that high, well, that's definitely not out of the realm of possibility. And so we never want to rule anything out like that. But other than that, you guys have a wonderful day. Make sure that you're managing risk and sticking to your trade plan, and I will see you guys tomorrow.